Asian stocks lose leap from shorter China quarantine, slip on inflation fears. Tokyo stocks fell throughout Asia on Wednesday morning, extending overnight losses on Wall Street amid worries over recession, inflation and excessive oil costs, which also boosted the safe haven greenback. Japan's Nikkei index fell 1.01% in early buying and selling, even as MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.1%, dragged lower by Australian shares, off 1.29%, and Korea's Kospi, down 1.57%. Asian shares had ended the preceding consultation on a fantastic trajectory after China introduced an easing of its quarantine requirements for inbound passengers, in what some observers noticed as the most important rest thus far of its zero-COVID strategy. But the effect became petering out on Wednesday. Inevitably, markets tend to overreact to those sorts of information, stated Carlos Casanova, senior economist at UBP in Hong Kong. In order for that to be sustainable, we actually need to peer these measures materialize into real reopening. Chinese blue chips, which hit a 4-week high the day before, misplaced 0.6% at the same time as the Hong Kong benchmark fell 1.3%. The losses in Asia observed a turbulent day on U.S. markets, with the S&P 500 index down extra than 2% after statistics confirmed U.S. client self-belief dropped to a 16-month low in June due to fears high inflation ought to motivate the economy to gradual substantially within the second one-half of the 12 months. Renewed issues over the potential for a worldwide recession dispatched buyers to the safe haven greenback, and the dollar index remained corporation at 104.4. The euro dropped 0.6% at the dollar overnight, and become little changed in early Asia at $1.0529. The Japanese yen stood at 136.03 in step with greenback, not some distance last week's 24-year low of 136.7. The yen has struggled because the Bank of Japan keeps economic coverage unfastened even as different principal banks tighten, a factor reiterated through BOJ Governor Haruhiko Kuroda on Wednesday. The yield on 10-year U.S. Treasury notes became flat at 3.1697%. Oil prices fell lower back barely after 3 classes of gains, however global deliver tightness underpinned the market. An overnight report advised that Saudi Arabia and the United Arab Emirates are not able to raise output notably within the close to future. Brent crude futures fell 0.53% at the day to $117.35 a barrel. U.S. crude become down 0.37% to $111.39. I assume that on the spot expenditures will likely continue to be multiplied, said UBP's Casanova. But I don't think that we can see a sizable spillover onto other Asian asset training, except for doubtlessly bonds for some nations which are very sensitive to adjustments in strength costs. Spot gold rose barely, gaining 0.15% to trade at $1,822.48 an oz.